Hello traders, welcome back to our market forecast. This week, we're going to be doing the market forecast for the week of June 14th. This week, we're going to be looking at a lot of high impact red folder news, and as well as some of very good technical setups that we're currently keeping an eye on, and hopefully you can add them into your checklist for this upcoming week, your watch list, and maybe capitalize them on yourself. So, without any further delay, let's get right into the video. All right. Welcome back to the market forecast, everybody. We're going to start, as always, by diving into the fundamental drivers of this upcoming week. I hope you guys did play it safe this last week because we did have some very strong CPI numbers come out and shake the market up quite a bit on Thursday, as we were talking about last week on this series. So I hope you guys did listen and maybe moved your stop losses or played it safe around that time. Hopefully nobody got burned. So for this upcoming week, we're going to be looking at a little bit more news than last week, starting off on Tuesday at 8:15 for the GBP, and starting off as well 8:30 a.m., so just 15 minutes later for the USD, when PPI numbers come out, retail sales, core retail sales, etc. 8:30 a.m. on Wednesday, we're going to have some CAD news, and then at 2 p.m. on Wednesday, we have some USD news, as well as 2:30, and 6:45 NZD news, 8:10 p.m., Australian dollar news, and 9:30 p.m. Australian dollar news. This is all labeled in Eastern Standard Time. And on Thursday, we're going to have ending the week off with some news at 3:30 a.m. for the Swiss franc, and then 4 a.m. for the Swiss franc as well. So a lot of news, especially on Wednesday. Be careful on Wednesday and then Thursday morning. Besides that, we should be fine for a great trading week. So the University of Michigan's consumer sentiment number for the U.S. increased to 86.4 in the month of June, which we are in now, from 82.9 in May, which is beating the market forecast of 84 by 2.4 points. This measures how optimistic consumers feel about their finances and the state of the economy. The higher the number, the more optimistic consumers, aka people spending money, feel about the economy, which is good news for us. As well in the news, we see WTI crude breaking above $71 per barrel for the first time since October in 2018. So a multi-year high is being broken, which is very exciting for the future of oil. I know a lot of people are eyeing up that $100 mark for oil. We're not quite there yet. We still have a little bit of room to go, but is it possible? Absolutely, it is on the table. So, good news for us, right? That means we're going to continue on with our risk on market sentiment. Risk on market sentiment for the viewers that have not watched this before, which we have kept with the same market sentiment for a while. But remember, there's only two market sentiments to really be looking at: risk on and risk off. We've been in a risk on market sentiment for a while, even though when we started the series, we were in a risk off. This just means the economy is doing better, which I think is undoubtable at this point, right? The economy is doing better, and it is continuing to improve. So it's very interesting to see how this continues. For us Forex traders, that means NZD, Australian dollar, Canadian dollar, euro, and pound will appreciate if the risk on market sentiment continues. As well as for our indices traders, that means indices around the globe will continue to appreciate as well. Looking at our pairs for our technical analysis, we're eyeing up USDCAD for a low base here, which is exactly what we had, and we just had a breakout on this 4-hour candle. We have a 4-hour candle close until the market closes. So we're going to see what happens in the next 4 hours, but what we could be looking for is an entry around this level right here when we broke above 1.259, or potentially a move back down to the high of this low base rectangle, whatever you wish to call it, and then a move higher. My first take profit is going to be set at this level because we have a level here that we've seen tested previously at $1.22.7. So we're going to be keeping our eye on that, looking for an entry because USDCAD does look really good right now for a long opportunity. USDJPY, still looking at the same channel we've been looking at. Look at our video last week, please, because we spoke about ABC corrections, and I don't want to go on to it every single week just so we don't get repetitive for our viewers, but it is important to know how ABC corrections play out, and I did touch on it in depth on the last video. But what we're looking for is a break out of this channel and a continuation lower on USDJPY. GBPUSD, we've been eyeing this up. As we know, there's a weekly fractal that we've been bouncing off of. As you can see, we're getting a rejection possibly this week, right? We still have a little bit of time. We have 3 hours before this weekly candle closes, but I do think that it will have this and close like this rejection that we're eyeing up now. This is the 4 day. 4 hour is what I'm looking for. Here we go. We're going to look for a break on the daily of this line right here. So let's go back to the daily. As you can see, we've just been bouncing off of this line. If we can get a break and close of this line, bounce off of this strong rejection, and as you can see, we've also formed a double top with divergence. It is going to be lining up for a very good short opportunity. I know I personally will be taking this trade if we get everything lining up perfectly, and I think it's a great opportunity to go short. So that will be our analysis for GBPUSD. Moving into CADCHF, we called this out for you guys last week just to keep it going. This was the only trade that I think activated this last week from last week's market forecast, except, no, I think this was about it, maybe one more trade, but this was the main winner, right? So we got the breakout after we made that announcement, and then it's just been continuing moving lower. Our first take profit was hit, so if you're still in, move your stop loss to break even, take some profits off the table. I'm personally out of this trade now, but it could obviously continue moving lower. The level that we're eyeing up for a C wave to complete is this level around here, 736 or 7365. So yeah, 736 or 7365 is what we're going to be looking at for our C wave to complete. For gold, here is a daily chart to show you exactly what we've been doing. So for people that don't know, we entered in right here in this level 2 entries at 1685. Been riding it higher. Been expecting a retracement of some kind to take us a little bit lower, just because we've had this very strong impulse wave. But we're going to yeah, that's what we're looking for right now, right? We're looking for a correction of some kind to help us continue moving up in our bias of a bullish trend. So maybe a push back down there, maybe not. Maybe we consolidate around this level. Maybe we found a low for a retracement already. But either way, we're going to be looking for possibly an additional entry, or just, you know, continuously trail your stop loss from these initial entries that we had. For if you're not in the trade yet, then yeah, look for an entry on this retracement, because I could definitely see this coming higher. We just actually got the confirmation. This was technically an aggressive entry that we called out. We just got a confirmation that this trade is like a more conservative entry, so you're able to still get in and possibly ride this higher. The first take profit is going to be at previous highs, 2066, and from there we'll then reevaluate and see where we're going. Silver dollar, what we're looking at here is the same thing we were looking at last week, still moving in this channel, this flag formation that we've been looking at in the last little bit after we broke out of this previous channel. So we're going to be looking to see what happens here, because it does kind of look like a continuation to move higher. US 30 is a really interesting chart right now. As you can see, we had our ABC correction playing out currently. We had our A finish and our B finish, and then we had a confirmation of break, so we had the break and then a confirmation 2 times of this support turned resistance line. So I have a bearish bias on US 30, potentially back down to form a flat around this level at 33,400. And from there, we'll continue to evaluate and see what's going on. But I do think that US 30 will be coming down unless we can get an invalidation of this level that we're currently at. So traders, that was our market forecast for the week of June 14th. I really hope you guys enjoyed and took some value out of this as to how we are currently looking at the markets and how we are going to act on setups that we see, and also how we're avoiding fundamental drivers. If you are not already subscribed to all of our social media platforms, be sure to do so, because we're releasing new content every single day, every single week on YouTube for you guys. As always, on behalf of everyone at Funding Talent, happy trading.